looking at the revenue, the spending, and overall fiscal deficit. So that's the key number we need to watch out, and that is coming at 8%. Now at 8%, if you compare that with the previous assumption, previous budget assumption for the current financial year, it was 10.1. So is it a kind of risk somewhere on the growth? Clearly no, because with 8% of nominal GDP, it's pretty clear that government is on the is on the track as far as fiscal numbers are concerned. However, there could be some changes you could perhaps see in the revision of the tax numbers, the revenue numbers in the upcoming budget. The another important factor which need to be watched out, that what is government going to have a projection for the next financial year in terms of nominal GDP growth, because 8% is giving you that much of cushioning because of the broad base in the FY25, which is around 9.9%. So clearly that sort of cushioning is coming, but definitely the government will take a call on how they're going about their targets, the budgetary targets in terms of the revenue projection, in terms of their expenditure, as well as whether they are able to keep the fiscal deficit target at 4.4%. Is this first estimate which is going to decide? Malika?
Yes. As you mentioned, the fiscal deficit, and in fact, Radhika Rao was also talking about it. Ms. Sengupta, I'll get you in on the fiscal deficit number, because, the GDP figures is a very important factor when it comes to managing the fiscal deficit. How do you think, now that the numbers have come out, will the fiscal deficit for FY26 be impacted, and what direction is it going to take?
I just want to give one caveat. So the 10.1% nominal GDP growth that was budgeted, that was based on FY25 RE of GDP. So what happened was FY25 nominal GDP turned out higher than the RE. So if you put the implied budgeted growth rate of nominal GDP on FY25 actuals, the growth rate, budgeted growth rate is actually 8%, not 10.1%. So if the advance estimate is indicating the nominal GDP growth is at 8%, which is on top of FY25 actuals, then it's in line with the union budget. It doesn't add or reduce. From a fiscal perspective, this has been a very challenging year for the center as well as state governments in terms of tax collection. For the center, we see quite a shortfall in tax collection. Our shortfall in gross terms is tracking at around 2.5 to 2.8 trillion in gross terms from the budgeted target. And this is reflecting the substantial income tax cut, the substantial GST cut. On top of that, slowdown in nominal GDP growth from a 9.8 in FY25 to an 8% growth estimate for FY26. As per us, nominal GDP might be slightly better. So we are building it maybe at an 8.2. Versus the advance estimate of an 8%, or the budgeted estimate also of an 8%. So there is a challenge that has happened on the revenue collection front, but we still expect the center to meet the 4.4 target. Reason being, non-tax collections have been very robust. You have an RBI dividend, which is higher than budget estimate. The center is also earning more on excise duty collections because they had hiked petrol diesel tariffs in the month of April. They had hiked the duty on petrol and diesel. The other support is PSU dividends, especially oil PSU, coal PSU dividend. That will be higher than what is budgeted. So, and on the expenditure side, especially revenue expenditure side, we see sources of saving. One is the just-in-time cash management on the funds that the center provides to states for expenditure on schemes. There, every year, over the last few years, the center has been saving money because of just-in-time cash management. The other source of savings is that interest cost for the center is tracking lower than the budget estimate. Plus, there are various other areas where certain ministries are tracking lower than the full year budgeted number, and now we are entering Q4, so they cannot spend, the full budgeted amount because there's restrictions that are placed in Q4. So overall, even though the tax collection will be weaker than target, the fiscal deficit is still met at 4.4.
Thanks for that clarity, Gauda. This is Shrimi from Delhi. I wanted to understand that with the nominal GDP coming at 8% for the current financial year, what's your expectation on the next financial year, that is FY27? Because clearly this will going to be the base for government to decide on the nominal GDP for the next financial year. So what's your estimation?
So as Radhika mentioned, we'll be getting the new base GDP. So our estimate is still on the old base, but it shouldn't make too much of a difference. Our estimate for FY27 nominal GDP is tracking at around 8%, is around 10%. So from an 8.8% around FY26, it picks up to 10%. The pickup is led by the deflator growth picking up, because next year you'll have a base effect which will lift both CPI as well as WPI inflation. So we do expect the nominal side to pick up to around 10% in FY27, which should be a little helpful in terms of tax collections. In real terms, we expect real GDP growth next year to be around 7%. It actually could be higher, but for now we are sticking to a 7% for FY27.
Okay. Radhika, I want to come to you just for understanding, because as we all know that from February 27th, when you will have the second advance estimate along with your Q3 numbers, the base year will change. The base year will be now 22-23. So all these numbers, we have seen quarter1, quarter2 with 7.8% and 8.2%, and now this first advance estimates of GDP, all these numbers are set to change anyway. So what's your sort of view on that, where these numbers stand?
Thanks, Shrimi. Certainly, I think for all of us, I think there's going to be a big bunch of changes coming. GDP, inflation numbers are also going to look different. Of course, the base year for inflation will be, will be 24. And then you've got IIP, which perhaps will be released later in the year, April, May, where we're going to see another set of change because of the base year. Now, going with the past revision, I mean, if I were to look at the 2015 revision, of course, it's hard to pen at this point where exactly the number would be. But I would think there would be a slight upside bias rather than a downside bias to the numbers that have been released. In 2015, we also had the GVA series that was introduced. We moved from factor prices to market prices. So quite a bit of methodology changes also that happened back in 2015. And I think there would be more such at this point, because you will have more granular data, you will have more sectoral data that will be introduced as well based on what MOSPI has been telling us in the past few weeks. So putting all these things together, I would say that fiscal deficit for FY26, to our mind, is safe to the extent that we do think that the 4.4% of GDP target will be met. But fiscal 27, the focus is going to change. Your nominal anchor or target for fiscal 27 is going to be debt levels and deficit levels, right? So the finance minister had mentioned in last year's budget that you're not going to be looking at just the deficit point target anymore. It could be a range, and you will be looking at in cohort with where the debt levels are. So from that point of view, I think with a 10% nominal GDP assumption, I think a 4.3 or 4.2% of GDP sounds doable. But I also add here that from here on, I don't think the space of consolidation is going to be very aggressive. I think from pandemic, we already at less than half. But I don't think in the next 4-5 years, the idea is to pursue very strong fiscal consolidation. I think there is a very clear agenda, at least to our mind, that the government wants to back all its new and strategic priorities, so which means that we want to get a bigger piece of the supply chain pie. We want to focus more on infrastructure outlays. It's already been mentioned about deregulation and decriminalization. So I think the focus is more on supply side and demand side pressures, because truth be told, the global environment is extremely challenging at this point, from the trade front, from policy front, from security apparatus front, all of that, right? So I think the agenda will be to strengthen the domestic economy as much as possible. So on defense, on infrastructure, on support to states, as well as the supply chain bit. These are some of the priorities we think will come out of the budget. So coming back to your question, I think the rebase numbers, if anything, based on past experience at least, could be similar or have a slight upside bias, which essentially again plays back to the fact that the fiscal deficit targets, at least that will be set for fiscal, which have been set for 26 and might be set for 27. We don't expect a big overshoot or undershoot based on the kind of trend growth that we see.
So both of you actually, Radhika and Gaura, you're saying that the fiscal deficit target will be on track, and that is 4.4% for the current financial year. But one thing I wanted to ask, since we have seen the impact of income tax cut on the tax collection, we have reached around 73 trillion so far, and we have 1 quarter left. Do you see some sort of downward revision in the tax collection target for the current fiscal, and government would also sort of decide its next year target based on the nominal GDP?
Sure. Who's this question for?
Gaura, you
This
can answer
question
that.
is for whom? All right. Thanks.
Gaura,
as I mentioned, we've seen, we are seeing quite a significant shortfall in tax collection. For us, gross tax collection is tracking at around 2.5 to around 2.8 trillion lower than the target. And this is spread over income tax as well as the GST collections. Income tax collections there are two reasons for the miss. One is the target of the income tax collection in the budget was very ambitious to begin with. So if you look at the budget growth rate implied of income tax in FY26 based on actuals of FY25, it's a growth rate of almost 22% in a year where you are having a substantial income tax cut. Secondly, because of the nominal GDP growth slowdown, that further adds to the slowdown in income tax. Plus, last year, the income tax got a little bit of support from the equity market performance. That's missing in FY26. So that's another drag. So yes, definitely we expect that the target for tax collection has to be revised down in the RE number for FY26, which will get presented in the union budget. We see a shortfall in both income tax as well as shortfall in GST tax collection for the center.
Right. Thanks so much, ladies. Gaura Sengupta, Chief Economist, IDFC First Bank, as well as Radhika Rao, Senior Economist Executive Director at DBS Bank, and as well as our Delhi Bureau Chief, Shrimi Chaudhary, for joining us in this conversation and helping us understand the various levers of the first advance estimates of the GDP of FY26. Remember, viewers, it has come in at 7.4%. versus what was expected before. But let's move on and talk about how Indian markets fare today. The markets closed lower today as the Nifty ended in the red for the third straight session. Benchmarks underperformed the broader market indices, and Nifty Auto emerged as a top, in fact, the worst performing sectoral index, snapping its 6-day gaining streak. Most sectors ended lower except IT and pharma. They had a good day. But let's get in my colleague Mahima for all the key highlights from today's market action. Mahima.
Well, overall for a market, it's been a topsy-turvy day in terms of where the benchmarks are concerned. They underperformed the broader markets, but well above the 26,100 is where we've found the comfort zone. With regards to the broader indices, overall it was a good session. Both the mid-cap 150 and the small-cap 250 closed in the green. Nifty closed lower for third straight session. Cipla and Maruti were the top losers on the Nifty versus Titan, the top gainer on the Nifty today. Sectoral indices closed on a mixed note largely. Nifty IT was the top sectoral gainer, closed around 2% higher on the back of, ahead of its Q3 earnings. The Nifty Auto fell the most, saw the most profit booking, emerged as the top losing sector for the day. Tata Elxsi KPIT Tech gained over 6% as JP Morgan upgraded its rating. You have Tata Elxsi and KPIT as the top gainers for the mid-cap 150. Elecon Engineering gained again 8% ahead of its Q3 earnings, and Elecon Engineering and Saregama were the top gainers in the Nifty small-cap 250 space. The advance decline ratio also indicated, almost even Stevens when it closed, because throughout the day there was topsy-turviness with regards to where the advance decline ratio stands. So this is the overall view as to how markets have fared in trade today.
So topsy-turvy trade today, but viewers, that's all the time we had on this edition of Profit 360. Do stay tuned to the channel as we continue to bring you a lot more news and updates. This is Malika Mishra. Thanks for watching.
Agarwal Packers and Movers Limited. Man with the cap. Not 300, 300, 300.
For decades, Punjab has been celebrated as the food basket of India. But today, the state is undergoing a transformative shift, emerging as a powerhouse of industrial innovation and opportunity. This is the story of Punjab's industrial resurgence. Under the visionary leadership of Chief Minister Bhagwant Singh Mann, Punjab is not just attracting investment, it's cultivating an ecosystem where industries can thrive. The focus is clear: ease of doing business, robust infrastructure, and a skilled workforce.
इंडस्ट्री लग जूगी, साढ़े नौजवान मुंडे कुड़ियां नूं काम मिल जूगा। इंडस्ट्री तो ही असीं सुझाव लए ने सारे, बहुत सारे इंडस्ट्रीज बैठे ने। इंडस्ट्री तो इसी पुछिया भी की करिए। सरकारां तंग करन वास्ते जां सरकारां कोई मुश्किलां पैदा करने वास्ते नहीं बनदियां। सरकारां हमेशा सहूलतां देण वास्ते और लोकां दी तरक्की, लोकां दा जीवन पੱਧਰ ਉੱਚਾ ਚੱਕਣ ਵਾਸਤੇ ਬਣਦੀਆਂ। ਸਰਕਾਰਾਂ ਦਾ ਕੰਮ ਹੀ ਇਹ ਹੁੰਦਾ, ਜਿਵੇਂ ਲੋਕ ਕਹਿਣ ਉਵੇਂ ਸਰਕਾਰਾਂ ਨੂੰ ਚੱਲਣਾ ਪੈਂਦਾ ਔਰ ਚੱਲਣਾ ਚਾਹੀਦਾ ਵੀ, ਕਿਉਂਕਿ ਸਰਕਾਰਾਂ ਲੋਕਾਂ ਨੇ ਚੁਣੀਆਂ ਨੇ।
The government has streamlined processes, cutting red tape and ensuring faster clearances through its single window system. Key sectors like agro-processing, IT, pharmaceuticals and textiles are receiving unprecedented support. We are seeing a surge in startups and SMEs, many led by dynamic women entrepreneurs, diversifying Punjab's industrial base beyond traditional sectors. This is Punjab's promise. A land of enterprise, innovation and sustainable growth. The government is not just building industries, it's building a prosperous future for all. Come, be a part of Punjab's industrial success story.
भाई कोई कूल बैंक बताओ ना जिसके लिए हर कस्टमर इंपॉर्टेंट हो।
SBI कूलेस्ट है।
व्हाट?
किसान से NRI तक, Gen A से Gen Z तक, SBI सबके लिए है।
वेरी गुड।
SBI, the banker to every Indian. Truly.
Punjab government foremost in public welfare. Investment of rupees 1.5 lakh crores in 3.5 years. Punjab has seen an investment of 1.5 lakh crore rupees in just 3.5 years of the government led by Bhagwant Singh Mann. This has generated employment for 4.5 lakh people in the state. Tata Steel is setting up a green steel plant in Ludhiana with an investment of 2,600 crore rupees. This plant will produce 7.5 lakh tons of low-carbon steel per annum from recycled scrap to meet the growing demand for sustainable steel. Man-made fiber, power, packaging, food processing, automobile, IT, semiconductor, hospital and services are the emerging sectors for investment in Punjab.
ਰਾਈਟ ਟੂ ਬਿਜ਼ਨਸ ਹਰ ਇੱਕ ਕਹਿ ਦਿੰਦਾ, ਬਟ ਈਜ਼ ਆਫ ਡੂਇੰਗ ਬਿਜ਼ਨਸ ਉਹ ਤੋਂ ਵੀ ਜ਼ਿਆਦਾ ਵੱਡੀ ਗੱਲ ਹੈ ਕੰਮ ਕਰਨ ਦੀ ਸੌਖਾਈ। ਸੋ ਸਾਡਾ ਮਕਸਦ ਇਹ ਹੈ ਕਿ ਅਸੀਂ ਪੰਜਾਬ ਨੂੰ ਹਰ ਖਿੱਤੇ ਦੇ ਵਿੱਚ ਅਸੀਂ ਪੰਜਾਬ ਨੂੰ ਨੰਬਰ 1 ਬਣਾਉਣਾ ਚਾਹੁੰਦੇ ਹਾਂ।
In order to give new wings to industrial development in Punjab, the government set up 24 sector-specific advisory committees with prominent industrialists as members in August 2025. The recommendations of these committees related to steel, heavy industry, textile, IT, semiconductor, hospitality, healthcare, packaging, etc. are being implemented on the fast track Punjab portal with priority.
पहले के ज़माने में तो ऐसा होता था कि इंडस्ट्री वालों को पता ही नहीं चलता था कि मेरे को क्या क्या करना चाहिए और वो बेचारे काफ़ी अरसे तक तो उसी में जूझते रहते थे। आज वो स्थिति नहीं है। आज इन्वेस्ट पंजाब के थ्रू एवरीथिंग इज डन वेरी कोहेसिवली इन अ वेल कोऑर्डिनेटेड मैनर, ताकि इंडस्ट्री को टाइम टू टाइम सारी अप्रूवल्स मिल जाती है।
Punjab government foremost in public welfare.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. So let's start the show, but I want you to guess the company which is coming at KYC today, where we'll dissect the company and also ask the management about the outlook ahead. Now the company is a Gujarat-based power and distribution player. That's the first hint for you. The second hint, recent announcement in a very big sector where a lot of interest is coming. That's the BESS segment, a battery energy storage space. That's what we'll be looking at. Company also is down 35% from 2024 highs. That's a lot of concern from the investors coming in, and they have written a lot of questions to us, and we will be asking that with the management as well. Recently, they've won the GUVNL project as well. Now, let's give you the company's name. You know, what's the concern coming? That's also a very important thing. The transmission industry orders are dying up as well. So we will be asking the reason, will this continue or not? But to give you the perspective, the name of the company, it rhymes. The first name is with a Bollywood's big superstar as well. And no doubts for guessing, it is Rajesh Power. This is the company which we are talking about, Rajesh Power Services. But why are we calling this company? The stock has, given very dismal returns in the last 1 year or so. But what are the concerns coming? The first is a very major announcement has come in. What's the rationale for foray into the BESS space? Already the transmission and distribution space, there are some kind of headwinds already there. The second reason why we are calling this company is there's a rising competition happening in the distribution space. So where does the company stand? What's the moat here? Also, another reason why we are calling this company KYC is the industry is witnessing a slowdown in the transmission projects. And will this continue going ahead or not? That's a key concern where we will be asking the management. Also, another thing is a 3,500 crore order book. Where is the execution timeline? How will the company actually go about it? That's something we will be asking the management as well. Apart from this, going ahead, these are the key reasons why we have taken Rajesh Power here, and any kind of execution of B2G risk. That's one of the largest questions we get from our viewers regarding companies like this, especially what's the private and the overall kind of momentum to look at for the governments. And joining us would be Utsav Panchal, the Director and CEO of Rajesh Power. He will be answering all of our queries as well, which we'll be putting it up. But apart from that, let's look at about the company, what it is all about, and then Utsav will also come in to explain us what's the overall rationale going ahead. But first key reason, of course, is going to be overall you're looking at about the company, like what the company is actually doing. It's a Gujarat-based transmission and distribution player, and largely the company is transferring from an EPC veteran player which is already there. It's a company, it's a turnkey EPC solutions player, and now it's going into the newer areas as well. Let's understand more about this company going ahead. And apart from this EPC solutions player, the company is established in 1971 and specializes in power transmission and the distribution segment as well. And largely we see momentum coming in the stock. The stock made its debut in December 2024, and since then the stock has tripled. But last 1 year or so, the stock has taken a lot of patience of the investors. They are executing turnkey power sector projects in the transmission and the distribution space. And also looking at the other operations, they offer comprehensive OEM services as well. So that is an important thing. OEM services are for the solar plants, substations and the distribution systems for the business operations. Apart from the business operations, they are offering strategic consulting for the substation and the cable ecosystem design as a whole. If you just imagine a grid structure, that is where Rajesh Power is an important component player, largely regional player, but definitely we are going to look at that Unexecuted order book and L1 positioning is at roughly 3,500 odd crore rupees, and we'll be looking at the outlook, what Utsav will say. Will it be that 5,000 crore mark in some time? So order inflows was roughly 2275 crores in H1, and largely the industry gets better numbers in H2 as well. Apart from this, let's look at the order book positions. Transmission and distribution, that is it. Almost you could say 76% comes from the distribution segment, and the 24% comes from the remaining in the overall transmission segment. So this is the overall order book position coming in, but there are ongoing projects which should be important. 130 kV GIS project in Jodhpur. Apart from this, there are other important projects also which are going ahead by Rajesh Par. If you could just show the important projects. Yes, going ahead. One is there in Jaipur. So largely we are seeing there is a kind of a move happening apart from Gujarat as well. And large power kind of orders are also which is there in the company, and a big supply arrangement. The recent announcement has come in for Bari's BSS project as well. So a lot of developments are happening in Rajesh Power. You can just look at these important ongoing projects, and going ahead, of course, the focus will be in the new business sector, the BESS. But why have they entered? That's also a big question, because already two of these segments, they are facing already headwinds, and the third one they have taken again. So that is something which we'll be watching out for. So this is the important developments which have come in about the company. But let me explain you the overall KYC setup. How do we rate a company in our KYC show? If you could just show the important ratings, that will be very much important in our show. First of all is, of course, the income statement which comes in, the balance sheet, the cash flow, the return ratio. These are the four basic financial ratios which are there. Apart from this, there is shareholding, the street cred, which is nothing but the stock price movement which is happening across various periods, valuation, especially if we compare that with the peers, and last but not the least, the outlook of the company. So these are the important 8 KYC rating parameters where we will judge the company. So the first rating parameter I'd like to talk about, that is the income statement. How the income statement has actually panned out over the next 3 years. We have taken the 3-year CAGR numbers. H1 numbers have also been there in our analysis, and rightly we see the revenue and EBITDA numbers. Let's move ahead and see how they have actually panned out. The 3-year CAGR numbers, the revenue is at 94%, EBITDA coming in at 125%, but the PAT numbers, they are also very decent. And you look at it, there has been a significant growth coming in, and of course it's expected to go past that 100 crore mark in FY27 as well. So net income statement prima facie looks very strong, so I've given a thumbs up for this. But let's look at the second parameter, and that is the balance sheet parameter. Balance sheet is also pretty much important. Largely it seems stable. To look at the overall borrowings, that has actually crept up around 82 odd crore rupees. But remember, this is a very capex heavy industry. There's always a B2G and an execution risk also involved to it, and that's what we'll ask Utsav as well. And the cash bank balance, that's decent. That's around 60 odd crore rupees. Remember, this number has gone up, and it's been almost, you could say, almost September 2024 onwards, or just before that the listing was there. But net it's decent, so I would be giving a neutral rating. The third one is the cash flow segment, and that's where my concern starts coming. I had earlier mentioned you about the B2G risk, the execution risk, and the cash flow segment, because the company is having a significant government exposure also in terms of revenue. And look at that, the operation cash flows and net cash flows, that's where my concern lies. This is just the numbers of H1 FY26, and that's the way where the concern is coming in. And because of that, I will be giving this cash flow segment a thumbs down. So we spoke about the cash flow segment. Another number comes is the ROC and the ROE numbers. Generally for these companies, you could expect 20 to 25% to be a healthy one, and the company has been doing well. FY25, this number has gone up to 44%. This is the ROE numbers. Let's pull up the ROC numbers. That's also decent. That's also going up. It's an upward trajectory which is there around 35. But will this be a bit of pain going ahead, especially when they're going into the new industries, BSS and stuff like that? So because of that, I will be giving a neutral rating, because the history has given a very strong up move, but the future, will this plateau or not? And that's a concern which analysts and some of our viewers have written to us at our KYC show. They have stated for this company, and that is why I've given a neutral rating when it comes to the return ratios. But I'll show you, apart from the return ratios, what else is very much important. We spoke about 4 rating parameters, and all of these rating parameters are on the numbers. But apart from numbers, there's other stories also which say important aspect, the shareholding segment. Promoters are holding it very decently, 73 odd percent. September also this ratio was around 73%. But my concern starts coming is, even if there's a very, very little institutional participation, be it FIs or DIs, it is starting to reduce. Look at that, it's around 1 odd percent, and now it's going down, and almost you could say virtually not there. DIs also, they have reduced their holdings from 5% coming down to 3%. That means institutionally also there is a sell-off happening, and because of that there might be a reason why the stock has down 35% from the corrections from 2024 high levels. Public, it has increased, the retail participation has definitely increased, it has come in, but of course because of this the shareholding pattern I have given a thumbs down. Street cred, let's look at it, what has happened, what returns the investor have got over the last 1 month. Stock is down 9%, and also 6 months stock is down 23%. I already mentioned a big fall happening in the stock, and that's why the concern is coming in, and viewers write to us about these companies. But since IPO, if you are holding it, because there was already a 90% listing pop, apart from that still the company is 3x from its IPO price. So on that basis, I will be giving this a neutral rating when it comes to the street cred. Also, the 7th one is the valuations, and the company itself is having different peers, because company is having 2-3 businesses. There are wires and cables, there are project consultants and management companies also, but the nearest one I have taken is Kalpataru Power Projects. That's having a 35 times 12 month, you could say trailing P, but Rajesh Power, after a significant correction, is trading at 12x. That doesn't mean it's very cheap compared to its peers, because largely the corrections have happened because of the headwinds which are there, and institutional selling also seen in the counters. So valuations front, because of that, I've given this a neutral rating. Also, let's talk about the last segment, and that is the outlook segment. It's very much important, and we have taken what the management commentary was there in the recent Q2 update as well. First of all, they have stated that 40% CAGR growth across all key parameters. That's what they are expecting. And the second one is the BESS entry. Now, this is from the Gujarat Urja Vikas Nigam Limited, and that is something which we will ask Ujjwal. Apart from this, the order pipeline, that's expected to touch 3,500 crore rupees in the coming months. Currently, it's at 3,500 crore rupees. So that's an important statement. And a slowdown, that's the biggest concern. Slowdown seen in the transmission projects. What happens next? Anything you expect in the budget? That's what we'll be looking at. But as of now, outlook, I will be giving this a neutral rating. So let's revise the KYC ratings for the company. The income statement, it's around coming positive. Balance sheet, it's neutral right now. My concern starts coming in cash flow, and that is where this type of business model has a very big risk. Return ratio, they have been decent enough, at least for the industry perspective. Apart from this, the shareholding, that's where my concern comes. Institutional participation is not there. Street cred, largely neutral. Only if you're an IPO investor or holding it very early, you have made good money. But over the last 1 year itself, nothing has happened as such. Valuations, decent after correction. And outlook, that is something which we are watching out. So final rating would be for Rajesh Power around 3.5 out of 8. Generally, these are the neutral ratings when we give the KYC ratings to the show as well. But joining us is, of course, Utsav Panchal. He's the director and CEO, and he has been associated with the company for the last 7 years. He's an MBA from IIM Kozhikode, and interestingly, he has a specialty in the Six Sigma belt as well. Very, very warm good afternoon to you, Utsav. The question is, first of all, is the BESS project you have entered in here. Already 2 businesses are there which, your hands are full. This third one, how does it make sense, and why is, Rajesh Power actually a good fit in this BESS setup? Yeah, Utsav, please unmute your mic.
Yeah. So basically, thank you for inviting me over here. I'll just answer a question, quickly go through what we exactly do. So we are a leading player in the underground cable laying space, as well as the transmission line and distribution infrastructure space, where we are also carrying out major substation projects up to the 400 kV level, where there is a specialized substation called GIS, gas insulated substation. We are also carrying out that. So coming to your question, I'll just briefly give you a snapshot of the energy storage industry. Yes, we have recently received the LOI from GUVNL for a very small 65 megawatt into 2 hours, which is 130 megawatt hour project. So as of 24-25, the installed capacity in India was 507 megawatt hour, and the installed capacity that became in 25-26 is 5 gigawatt hour. So in 25-26, 65 tenders, which were totaling 102 gigawatt hours, were issued. So 2026 is a crucial year for the industry, proves itself operationally. So energy storage and Rajesh Power, if I say, while tariffs have, yes, collapsed in the standalone BESS segment, taking into account the strategic role and energy storage is poised to play in power generation, transmission and distribution, it is crucial for Rajesh Power to develop its credential as an expert in the BESS segment. BESS is a low-hanging fruit for Rajesh Power in the sense that the core infrastructure is battery containers, which are largely plug and play in nature. They are all pre-assembled solutions with battery packs, battery management systems, and liquid cooling systems built by the OEMs. So what comes next is the AC side. AC side, we as Rajesh Power are building substation, transmission line and cables, which accounts to almost 30% of the value of the BESS project. So this makes us one of the best all-in-one turnkey solution provider in the standalone BESS segment. So I think, I hope that answers your question.
All right, and Utsav, some concerns are there, and investors of the company also wrote to me. In Q2 itself, the company was facing competition in the distribution space. Is that competition there also in the third quarter or even the fourth quarter we can expect in the distribution space?
So if I tell you, we are particularly working in the underground transmission, underground distribution space. That is the underground cable laying space, which is a very specialized, nature of work we are carrying out. Also, additionally, we are carrying out medium voltage covered conductor projects, which is roughly around, we are executing 50,000 kilometer of MVCC. It is just a traditional overhead conductor replacement to, the new underground, the new type of conductor, which carries more power and reliable power. So we are into specialized kind of work. So that is what makes us a little bit unique from our other peers, where we are having the technical experience, the expertise that helps us.
But the competition is still there, because in Q2 you had mentioned about it. So till now the competitive pressure is coming in the distribution space for you?
So there is competition, but what we are working in is a unique combination of projects where the competition is very limited.
All right. And interestingly, the transmission project, now this is an industry-wide problem, it's not company-specific to you. But Utsav, the industry is seeing a good slowdown in this transmission projects coming in. Do you think after this budget, these numbers can move up? So there's a two-part question to it. The slowdown in transmission projects, is it still continuing or some green shoots are coming? And what would be your budget expectations?
So what I would like to, give you some inputs over this. Recently, the Ministry of Power did announce a few slowdowns in the power, the renewable capacity additions. The main reason of the renewable slowdowns is, the transmission grid is actually not sufficient to build the equivalent renewable. So the speed with which we as a country have grown our renewable generation, we are not able to generate the transmission speed at the same momentum. So in fact, I would look at the other way, that we are having very aggressive outlook in the transmission segment. Just if we say we are working in Gujarat and Rajasthan, we are having a very huge order bid pipeline, as well as, the government has set up some very huge projects of substation, transmission lines and underground cable projects. So what we are seeing in Gujarat, the JETCO has given an outlay of 96,000 crore to be executed in the next 10 years, which is roughly converting to 9,600 per year. That is mainly because there is a 30 gigawatt renewable that is there in Khavda, and it needs to be evacuated in this part of the state. So we are seeing a very good traction.
Okay, so that's a good traction on that. But Utsav, you had mentioned 40% growth across all the key operating parameters, and that was a blanket statement you had given in Q2. I also mentioned, so give me what are the key top 2 metrics to track, and what are that 40% growth and why you're stating that?
So basically, if we see our our order book as of September, we are having a 3,500 crore order book, which we just proved to have an order inflow of 2,200 crore worth of orders just in H1, up to September 26. So we are seeing a very good bid pipeline in place, and that is what has enabled us. So in case if we just see the order book of 3,500 crore, which is to be executed in a period of 18 to 24 months, we quite have a very good revenue visibility in that sense.
All right. Just one query on the financials front. The cash flows are not improving, and that is where the B2G risk, the execution risk comes in. And, investors also get restless. The stock is also cracking. I won't ask about the stock price fall, but the concern remains is. So operating cash flows, what happens?
So basically, if you see the nature of our company, we are EPC mainly. We are working with decent margin, but as well as utility specific payment terms. So the negative operating cash flow is primarily due to the retention money inherent to the EPC contract. So what is retention money? Retention money is contractually locked receivables with zero risk, where the counterparty is usually large utilities and governments, and it is fully recoverable within time. So it is the retention money that is locked. But if you look at our business, our EBITDA margins are stable, projects are not loss making, and we have no cost overruns or liquidated damages. So we are very much confident in that.
All right. There's an interesting phase. You have entered into the 400 kV GIS segment. Generally, you are into 220, 200, if I'm not mistaken. Now, this new entry segment, what does it actually mean, for this segment and this industry as a whole? How many other big players are there apart from you? Because this is a larger capacity, if I'm not mistaken, and you have entered into it. So give us more details on that.
So with the recent, entry into the 400 kV GIS segment, the GIS is particularly gas insulated substation segment. Very few limited players, hardly in a single digit number, are there in the entire country to have capabilities to execute such kind of projects. And we'll be completing this particular 400 kV GIS project by around July, August, by which time we'll have some credentials to bid for very large sized projects, complex projects. So this will give us an edge over, other peers in terms of execution and bidding and winning ratio.
All right. Let's just revise the numbers which we have given in our KYC segment. And of course, Utsav, stay tuned. I have one last question for you. But overall, let's revise the audience what numbers I have given from the research team desk as well. And largely, we see the financials, they are good, but the cash flows, that's where my concern is there. And largely, we see the street cred also. There is a kind of a positioning coming down from the FIs and DIs. So net, I have given this company roughly 3.5 out of 8 when it comes to Rajesh Power. But Utsav, one query for you as an industry spokesperson as well. What are your expectations for this budget 2026?
So in the budget 2026, what we are expecting is very aggressive outlay in the distribution segment, particularly where we as all utilities are constantly working towards improvement in power reliability. If you see, we have been by doing undergrounding of cables, we have been able to improve the power failure, power downtime by a significant amount in just this part of the country. So that is one point. And second point, we are seeing a focus on smart grids. Now that is where we have associate company called HKRP Innovations comes into play, where we are providing IoT based smart monitoring systems and solutions to the utilities.
All right. Can you just give in some more details about this HRKP, because everybody is talking about it, and the future outlay, when the incremental benefits will start coming in from this arm, could you give us a timeline?
So basically, in the HKRP Innovations Limited, we are basically providing end-to-end solutions for IoT-based smart grid monitoring systems, where we as a country have witnessed smart metering projects, at the consumer end. So we at HKRP are everything before the consumer end, where we are providing solution to digitalize the assets and monitor and control the assets of all the grid parameters including substations, transformers, and everything. So we have hardware as well as software solution. And the growth outlook of HKRP is also very promising in the sense the government focus on modernizing the grid. So that is where we come in. And in the immediate next 2-3 years, we are seeing a very good growth visibility in that company as well.
Thanks a lot, Utsav, for giving your views on the company and the industry. And it's very nice to chat with young, dynamic CXOs of companies at KYC. Best of luck for you and the entire Rajesh Power team as well. So that's the management of Rajesh Power. And of course, they have mentioned and they have defended that this is the way the industry works when it comes to their cash flow impact which has come in. But they are still bullish on the budget expectations for the power industries, and net they're looking at the rating parameters, removing the financials. The outlook definitely seems like the worst might be over for the stock. Of course, the transmission part and the distribution part, that's where the concerns are there, but nevertheless company wants to jump in the BSS segment, which is the battery energy segment as well. So that's all, folks, for the company, for KYC today. Stay tuned to NDTV Profit.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
The nerve center of the maximum city, the BMC, a contest that will shape Mumbai's next decade, its identity, its legacy, its future. NDTV brings you the battle for Mumbai